Hello there. In this video we're going to be talking about premium and discount and also ranges. Following the whole concept of buying low and selling high. Basically that's what it is. You don't want to buy something that's extremely expensive, because if price drops, you're going to be losing money. You want to buy when it's a discount, and then likewise, if you bought it when it was cheap, you want to sell, maximizing the profits when it's high. And how do you determine that? Okay, so first off, there's a tool you use in a trading view that is, it's the gun box, or you can also use the Fibonacci. I use both, and then you just set it for 0, 1, and half. Okay, so basically the half a point is where we call it equilibrium. So knowing this, that there is a move on the market, for instance, it shot high and there was a pullback, and then it shot higher, breaking this old high. Now from this point right here to the new high is our range, because it just broke structure. Okay, so the range is when the market comes and it takes out one side and moves and takes out the other side. Okay, so now this is the range from here, range low and range high. So this is where you would mark your Fibonacci or your gun box, and then you would want to buy below the 50%. And a lot of times the market just taps the 50% and continues to go higher. And but again, it's just a preference. I would prefer to find something in the deeper discount area in order to buy and get a better RR. All right, so another example here. Here we were going low. There's a high time frame PD array. In this case, could have been either a fair value gap or an order block. The market came to this area, right? So there was a swing here, came down, tapped the high time frame PD array, and it broke structure to the downside. Now, as you can see, this leg started right here from here to here. So I marked my premium discount tool, right? And so I'm wanting to sell at a premium, right? So it comes and it breaks the this low, indicating the market wants to go lower. When it comes back to my POI, my point of interest, it can be an order block or a fair value gap. In this case, I would be placing my sell order right here. And let's look here. We've got an example. So the price is going higher, right? And then again, it made a high and it broke this low that put up that high. Now I mark my my premium discount tool from this high to this low, and then I wait for the market to come to an area. In this case, it was the POI, or the extreme order block, and I would put a sell right here. You can put it in the midpoint, and then the market starts going down. We don't have more markets to see here, but basically that's the idea. Now, how do you put that into practice? So let me reset right here real quick, and I'm going to show you a few examples for you to follow, and it can be used in any time frame that you choose. Anytime there is a swing low, swing high, or a range, that's when you mark or you use your tool. Before you continue watching this video, I want to quickly let you know that now you have the opportunity to join our Discord community, where you can have access to our exclusive content to help you learn how to day trade profitably. Besides that, you will also find other ways to have multiple streams of income and become part of a community of people that, just like you, want to achieve success. Just click the link in the description of this video or visit levelxtrade.com to have instant access. Now back to your video. I'm gonna just start or pick some place here, this high for instance. So market is going high, and then it broke structure to the upside and it broke to the downside. Now this is a swing low and this is the swing high. So I would get my Fibonacci tool and I would mark from here all the way down to that swing low, and as you can see, down to the tick. Okay, 50%, and it dropped. All right. So again, this here is where the market reversed. So we're going down and it broke down again. Okay, for instance, there was a market shift that happened right there. So it took out the low and took out the high. Now my range is from this low to this high. So I would get my Fibonacci tool and I would mark from low to high. And as you can see, below the 50%, there is a fair value gap. You can combine either a fair value gap, there's an order block, which is that last candle that we have there. 1 second, let me just stretch this fair value gap right here. And you have this candle that is an order block. Let me put order block here for you to see better. Okay, so you could have just put in your order at the order block or midpoint of the fair value gap. In this case, let's just cover the swing here, and you can target this high because it was a retracement all the way to high, or even this other high. In this case, it didn't quite touch it at that point, and it reversed. Again, it reversed. Look at the reversal. It took out the low, right? So now we have this high right here and this low. I marked with my Fibonacci. In this case, it went a little bit on the deep side of retracement. So let me switch to OTE so you can see. I've got the 62, the 70, and 79 levels, and went all the way almost to the extreme of that order block right there. But this is basically how you set up, or you look to see where you are on the range, right? And how you define a range is basically taken out of one side and the other side. Now you've got a range. Okay, so the same thing, take out here, take out the top right there, bottom, and now you can enter here. And then continuation, you just got to be careful, or just make sure that your risk management is on point. But a lot of times you can get a continuation to the 50% or even deeper continuation. You just need to know where you are in the market, and for that we use the market maker model, which we will be discussing in a later video. Okay, so thank you for watching, and I'll catch you in the next video. Take care.